Hi everyone. So today in this session we are going to start with a chapter in working capital management area. The name of the chapter we are going to start with is debtors management. So the name of the chapter is debtors management. What is this concept of debtors management? What will be there inside this? The logic behind this particular concept, okay? And all the other things relating to debtors management we are going to discuss in two sessions. Session 1, I will first cover what are all the concepts in this particular area called as debtors management. Once you understand the session 1, okay, this will be a short session for around 35-40 minutes. Once you understand this particular concept clearly from part 1, part 2 we will start doing 6 to 7 problems. Okay, some RTP questions, some questions, some study material questions also we will do. 6 to 7 questions I will solve for you. Once you solve those 6 to 7 questions, any kind of question that may come in exam relating to the chapter debtors management, you will be able to solve it. I will give time for you to copy the notes. I will give time for you to understand. But first, let us understand the magnitude of this particular chapter. Okay. First, point number one. Point number one. The chapter debtors management is not that much good presentation was given in the ICAI study material. They have not arranged the sequencing of the topics in a right way. They messed up with the contents and with putting the sequence of all the concepts in debtors management. Means there are a lot of assumptions inside this chapter debtors management. Okay, without presenting that assumption, they will give answers because of which students will get a doubt. Okay, why in some questions they are doing using variable cost, why sometimes they are taking total cost, why sometimes they are taking only total sales, like that people get lot of doubts, which makes this chapter very complicated. Therefore, in the first video, means in the first lecture, there are two lectures in debtors management chapter. This is lecture 1. Another lecture also will come, lecture number 2. Listen to those two lectures properly. This is a short session only. I will not drag it. Okay, we will be having a short session in the light of examinations. I will not drag much. I will tell you the concept. In that, there is no compromise. I will tell the basics of this particular area called as debtors management. Once the understanding of basics is completed, I will be going into a typical question which came for 8 marks in exam. Okay, we will do that 8 marks question directly. Once you do that, you will be settled with the magnitude of this chapter. You can understand it very easily. After that, any number of questions you take in debtors management, you will be able to solve. But I am not going to take any chance. I am not going to take any risk. What I will do is, first question and debtors management I will explain. Everyone listening to this video, consistently listen to this 35-40 minutes lecture. Complete it. You will get a confidence. Wavelength will be there. You will understand what is happening in this chapter, debtors management. All your confusions prior to this class will be roughed and it will be totally dumped into dustbin. You will be having a clear understanding of this concept. Okay, and debtors management will be a pakka 5 marks question in exam. Listen to this lecture properly. I will do one question also on this. One 8 marks question given in exam. I will take the facts and I will explain. Once that is completed, I will again do another 7 to 8 questions for you. Second video. That will be in 1 hour, 1.5 hour. Only problem solving I will do in that particular session. That session is optional for you. If you can try on your own, you can try. No, sir, I will listen to the lecture, means you can listen and you will complete. But this lecture will be crucial. And everyone listening to the lecture, you know about me very well. Very well, you know about me. When I explain the concept, I will explain with the utmost clarity and background first. Once you understand that any new question comes in exam, you'll be able to solve. So, in the same confidence level, first what I will do is I will first tell you the concept of debtors management, logic, everything with one question also I will do. After that, second lecture I will do another 8 questions. Okay, once that is also done here with this chapter, after that additional problems you do at your own time. Okay, let us start with debtors management concept. First one, what is this concept all about? What is this chapter all about? This comes under a very big chapter called as working capital management. What is the name of the chapter? Working capital management. In the working capital management, there are various segments. Working capital estimates, we completed it. Okay, cash management, we completed it. Inventory management, we completed it. Okay, next one is a debtors management. Payables is just like cash management again. So therefore, I'm not going to touch that now. Just it's a 2-page answers in the study material as well. Just practice it. So debtors management. This is coming under one big chapter called as, okay, that working capital management. Next, what is working capital? Working capital is nothing but current assets minus current liabilities. Current assets minus current liabilities. When I say working capital, leave about working. First, what is it? Capital. Capital means money. Capital means what? Money. Financing. Financing is called as capital. So, what is the logic of this chapter? Whenever you put the capital in two types of assets. One, the fixed asset. Another, in the current assets. Fixed assets will generate regular revenue in the form of sales. Current assets will augment your sales. Means no sale will happen unless and until you have stock. Unless and until you have stock. Okay, no sale can happen unless and until you have stock which should be purchased out of cash. So cash is important, stock is important. Stock should convert into cash means in the medium there will be a person called as a debtor. Okay, in the medium there is a person called as debtor. So there are three popular current assets: stock, debtors, cash. This is sequence. First put in the stock, next it become debtor. Debtors reconvert into cash. Cash again becomes stock. This cycle will continue. We already know about this in the concept called as working capital cycle. Working capital what? Cycle. Also called as an operating cycle. Okay. So in current assets, there are three main aspects. Number one, materials. Number two, I mean stock, materials. Already we have done inventory management for that. And debtors. Now we are doing debtors management. Stock, inventory management already completed. Cash management also already completed. Total called as working capital estimates already that is also we completed. Okay. Next. So first introduction. What do you mean by debtor? Why debtors arises? Debtors arises due to sales. Which sale? Cash sale or credit sale or credit sale? Means credit sale creates debtors. What is the statement? Credit sale creates debtors. Okay. Whenever you have debtors, you are having two problems. Okay. Technically, not two problems, three types of costs are there. There is a cost as well as benefit because of having the debtors. What is the benefit of having debtors? If you create debtors, credit sales will be promoted. Credit sales create more sale. I will give you example. Because of credit cards, today many people are affording iPhones, MacBooks, and more costly things. Because of loans, because of loans given by the bank, people are affording cars. People are affording homes. Home loan, okay, it's a long term. Car also long term. At least you take gadgets. You go to a shopping mall, you purchase something, you purchase your apparel, you purchase so many things, you will swipe a credit card and come out. And you will pay in 15 days or 20 days or 1 month or 1.5 month. From this, what you have to understand, these are all short term borrowings. Why short term borrowing? It's a credit sale. It's what say? Credit sale. Credit sale is a sale where goods will go first, money will come later. Goods will go first, money will come later. Because of this, there is a great advantage. It increases sale. It increases sale. Simply, I will tell you one point. You go to a shop, they don't accept credit cards. You will go to another shop where credit cards are accepted. Means you yourself is killing one business and you are transferring that business to another. People don't want that. Therefore, in this cutthroat competition in the entire world global scenario, people are not going to sacrifice their customers. Patronages are very, very important. Therefore, what everyone thought is we should have a credit sale. Credit sale means let the customer take the goods first, let the customer pay later. Take and pay later. Concept started in this world. Because of this, benefit is huge sale started happening. Along with that, there is a huge cost. Cost number one, you know very well, bad debts. Whenever you make a credit sale, person taking the goods may not pay sometimes. Such a situation we call as a bad debts. Bad debts can happen because of credit sale. This is disadvantage number one. Disadvantage number two. Along with bad debts, there is another problem called as recovery cost or collection cost. Means what? Whenever you make a credit sale, you should put one person who will make a telephone call. Your credit card bill is due. Please make the payment. Like that, you have to put some follow up. That follow up is not free. That follow up is having a cost. If you put a manual person like me, I will make a telephone call. I will ask when you will pay credit card. For me, you have to pay the salary. Second one, if you put a computerized AI bot in that, even for AI bot, you need to invest in lakhs. That means there is a lot of cost involved in this particular concept called as recovery. So, because of having the credit sale, there is an advantage of increased sale, there is a disadvantage of bad debt. There is a disadvantage of bad debt. There is a disadvantage of collection or recovery cost, follow-up cost. And the third very, very important thing is, I will tell you in two ways. I have cash. I have cash. I gave, for example, I purchased a good. Now I am the owner of that. Now I am the owner of that good. I purchased, I purchased a car worth 10 lakhs out of loan taken. And you took the loan, okay, you took the loan and you have taken the car and that car is going in the road. When car is going on the road, I am the person who sold the car to you, or I am a banker who gave you loan. Bank will see the car. Okay, it will tell my 10 lakhs is going. Means what you have to understand from this example, you see it as your asset, but bank will see that my money is in the form of that car. I gave you 10 lakhs loan, you paid the vendor directly, vendor is happy, you are happy, you got the car, vendor got money. In the middle, who is the bakra here, who is the middle monkey? Banker. Banker is unhappy because his money is going on the road. Yeah, we will tell that it is a car, I will tell that it is my cash. My cash is moving on the road, okay, for which you will pay in bits and pieces in the form of installments back to me. So therefore, third one is interest lost. What is it? Interest lost. Simply I can tell it's the opportunity cost of interest. Means what? See here, bank gave you loan, bank gave you loan, it is losing lot of interest on that or not? That's why they charge interest on the loans given. So the next thing that happens to a company is, whenever it promotes a credit sale, stock where you invested, that stock on which you invested cash is in the hands of customer, which he will pay later. For the 30 days or 40 days, you are blocking your cash or not, on that you are losing interest. If you would have only a cash sale, you would have realized the cash. Because of not having the cash sale but having a credit sale, you are not receiving that money upfront immediately, you are receiving at a future date. For the future period possibility, you are losing the interest, which we call as opportunity cost of interest lost. Therefore, whenever you are having debtors, there is a problem. The problem number one is bad debts. Problem number two is collection cost. Problem number three is the interest lost. Okay, next one. Listen to this concept clearly. Okay, I'm not putting anything on the screen. See, the background is also not notes. Listen first. After that, we'll directly start into the problem. I said, now, first video will be crisp, clear, and simple from the exam's point of view. I'll explain everything with a problem. You'll understand it. After that, we jump into the next problems. Okay, see here. Debtors equal to, remember, debtors equal to credit sales. Debtors equal to credit sales. Is a right or wrong? Debtors equal to credit sale is right or wrong? Wrong. Debtors equal to credit sales is wrong. Reason I will tell you, entire credit sale, okay, will be in the form of debtors. Debtors will start paying the cash. Debtors will start paying the cash. Simply to tell, whenever you tell debtors, it should be on the basis of the period for which the amount is blocked. Sir, I didn't understand this. This is a problem in this chapter. People don't understand the meaning of this concept. That's why problems become very difficult. Listen, debtors equal to credit sale means, do you know what is the meaning? All this credit sale you made will never be realized. It is in the form of debtor sale. Is it true? Debtors will pay the cash or not? Therefore, credit sale 1 crore equal to debtors, I said. Credit sales is 1 crore, true. In that, how much will be in the form of debtors is a question now. Okay. So, whenever there is a debtor, okay, don't call credit sales as debtor. If you call credit sale as a debtor, do you know what does it mean? Whatever the sale you made are in the form of debtors on the receivable side. Means you never received, it is always a receivable. That means no debtor is paying you. Is it right? A customer who purchased goods today on credit will pay after 10 days. Correct or not? Therefore, how many days credit you are giving decides the value of debtors. Okay, debtors equal to credit sale, wrong formula. debtors equal to credit sales into debtors collection period by 360. Debtors collection period by 360. What does it mean? Credit sales will be made. Entire credit sale, let's say for example, yearly I am making a credit sale of 3,60,000. Yearly I am making a credit sale of 3,60,000. I will give 3 days credit. Means by today, pay after 3 days. Pay after 3 days. Means today is Monday. Monday I sold. I will not receive money on Monday. Monday, Tuesday, Wednesday I will receive. Means today's sale amount I will receive on Wednesday again. That means how many days? Today, one day. Tomorrow, second day. Day after tomorrow, third day. Third day I will receive. Means third day I will again receive back or not. Then how can you tell that entire sale is blocked? Therefore, debtors is not equal to credit sale. Debtors is equal to credit sale into debtors collection period divided by 360. Debtors collection period divided by 360. In our example, how much is our credit sale? 3,60,000. Collection period 3 days. Tell me, 3,60,000, okay, into 3 divided by 360. Technically, 3,000 is the answer. Okay, what do you mean by 3,000? At any point of time, I repeat, at any point of time during the year, 3,000 rupees will be blocked in the debtors. 3,000 rupees will be blocked. The entire sale is not blocked. Only 3,000 worth is blocked any particular day you see. Okay, assuming that sales happen evenly throughout the year. That's assumption of all the questions. Okay, sales happen evenly throughout the year. 3,60,000 happened. We assume that 3,60,000 divided by 360. 3,60,000 divided by 360. Technically, our assumption is every day you will make a 1,000 rupee sale. Every day you will make a 1,000 rupee sale. 360 days you will be making that particular amount. Okay, 360 days you will make 3,60,000 rupees of transaction. So every day you will make 1,000 rupees. Okay, every day 1,000 every day. It is an assumption of all these questions. When I say sale, we assume that the sale happens evenly throughout the year. It's an assumption of all these questions. Okay, next. So whenever I say debtors collection period 3 days, what does it mean? Today's sale will not be received today, will be received after 3 days. Means my money is blocked only for how many days? 3 days. Any particular time during the year. So next, receivables manager. Who is that? Receivables manager has to take 4 important decisions. How many important decisions? 4 important decisions. Number 1, credit period decision. Means how much should be the ideal credit period. In our example 3, it should be 3 year, 30 year, 50 year, 180 days. What is the ideal credit period is one important decision receivables manager has to take. Second one, credit appraisal. What is it? Credit appraisal means what? How many customers are paying on time? How many customers are not paying on time? Which regional customers are not paying properly? Who are prompt in making the payment? Whenever they paid immediately, you have to give some benefit to them. Like that appraisal should be given for the credit, that's called as a credit appraisal. This is second decision to be taken by the receivables manager. Very important theory question, please listen carefully. Receivables manager has to take 4 decisions. Decision 1, credit period decision. Everyone repeat, what is it? Credit period decision. How much should be the credit period? Second, credit appraisal decision. Third one, discount policy decision. What is it? Discount policy decision. What do you mean discount policy decision? How much discount we can offer on the credit sale if he makes properly. Credit discount policy is next one. Last, extremely important, collection policy. Okay, 50 days credit given. From when I need to put the reminders to him, from when I need to take it at a small note, when I should take the level to moderate, when I should take harsh measures over the customer. Okay, all these things we should have a clear documentation. That's the purpose of a receivables manager. So receivables manager has to take 4 decisions: credit period decision, discount policy decision, credit appraisal decision, collection policy decision. Okay, this is the introduction to this particular area, debtors management. With one question I will explain everything about debtors management topic. Okay, next lecture what we are going to do is problems we are going to solve. Small new points will come now, that I will discuss directly in the problem. We will complete everything. Okay, people are thinking that data's management is complicated, data's management is difficult. Nothing like that. It's a dead easy chapter like any other chapter, provided you understand in a proper way. I am there to take care of it. So summarize everything. This particular thing comes under a big chapter called as, okay, this comes under a big chapter called as working capital management. Working capital is nothing but current assets minus current liability. Money invested in fixed assets, current assets. Current assets are stock, cash, debtors will be there. This is in the form of debtors. Okay. There are benefits of having debtors. There are demerits also there. Benefits will be increase the sales of the company, and the demerits are three. One is bad debt, second one collection cost, and third one will be interest lost. Debtors is not credit sale. Debtors equal to credit sale into debtors collection period by 360. Okay. So credit manager or receivables manager has to take four decisions. Number one will be, okay, number one will be credit policy or credit period policy. Second one, credit appraisal. Third one, discount policy. And fourth one will be collection period. I will open the document for you. Fastly write down the notes first. Okay, don't just take the PDF and copy. Write down this. I will give time. Done? Okay. Let's go into a problem. First, let us see the facts of this question. Sales 15 million per annum. 15 million represents 1 crore 50 lakh. Okay, 150 lakhs or 1 crore 50 lakhs. Next, cost of sales 75%. In that 75% cost of sales, 80% is the variable cost, 20% is the fixed cost. Bad debts 1% of the sales. Required return to the company 12%. Credit period 30 days. Now we are expecting to increase it to 60 days. Okay, this is the policy we are going to amend. So sales 15 million per annum. Okay, cost of sales is 75%. In that 70%, 80% is the variable cost, 20% is the fixed cost. Means costs are of two types, variable, fixed. Variable is 80, fixed is 20. Bad debts is now existing bad debts 1% of sales. Required return is 12%. Credit period 30 days. Expect to increase to 60 days. For that increase, we are going to take a decision. Expected changes due to credit policy increase or credit period increase. Because of increasing from one level to 60 days, there are three things that are going to happen. Sales will increase by 15%. I told you na, the benefit of having the credit sale is your sales will increase. Okay, next. Okay, that's the first one. Point number two, bad debts. Bad debts also will increase along with the increase in credit sale from 1% existing to 4% proposed. Next one, fixed cost will not change because you increasing the credit policy will in no way affect the fixed cost because fixed cost will be incurred irrespective of the credit period you give. Comment on the proposed policy. This is a 8 marks question. I have summarized all the facts. Exam question paragraph they will give. There is a company called as X Limited. Its existing sales like that they will tell. These are all summary of the facts. Okay. Read the question first. Read the question. Read for a minute. We will be going into working. Please read the question before we start. Okay, I gave 6-7 minutes time for you to understand the question. Now let us move into analysis. See here. Question comes like this. Okay, question comes like this. Sales given, cost of sales given, bad debts is also given. Why these will be given means existing in the existing policy, these are the things that are happening. Bad debts 1% of sales. Required return is 12%. Credit period 30 days. And we are expecting that credit period to increase to 60 days. Because of that, sales will increase by 15%, bad debts will increase from 1% to 4%, and no change in the fixed cost. From this, we have to understand the cost benefit analysis. Always listen, the presentation given by the institute is not that good. Okay, if you follow that, follow. But if you wanted to follow a right procedure, I will tell you how to understand it. Whenever question is given, we have to have one particular step called as a cost benefit analysis. Any debtors management question, if you can divide it into cost benefit analysis, it becomes extremely easy. Okay, what are the benefits of having the credit policy increase? What are the demerits or what are the costs? Okay, let us understand them clearly. First thing, from 15 million, okay, from 15 million, sales will increase by 15%. See here, first, every time whenever a question comes on debtors management, first working note number one will be increase in contribution. Increase in contribution. Okay, what is the existing sale? 150 lakh. Directly you see here, nothing to work out here. See, simple problem say. What is the existing sales? 150 lakh. In this 150 lakh, okay, existing, what is the cost of sale given? 75%. 112.5 lakhs is the cost. 37.5 lakh is your profit part. In this 112.5, 80% being 90 lakhs is the cost, a variable cost, 22.5 is the fixed cost. So tell me, sale 150, cost of sale 112.5, 90 variable cost, 22.5 fixed cost. Okay, 22.5 fixed cost. How much is the contribution? Sales minus variable cost. Sales minus variable cost. What is the contribution? 60 lakh. If you want to calculate PV ratio, 60 lakhs on 150 lakhs becomes 40%. This is one. This is the contribution increase under existing. Next, second, what is the proposed sales? 150 will be 150, 150 will increase. Take calculator. 150 plus 15%. How much? 172.5. In that 172.5, fixed cost will not increase. What only will increase? Variable cost will increase. Okay. 172.5 is the sale. In that 75% will be the cost of sale. Means 126. So 150 into 172.5. In that 172.5, if you observe clearly, 126. Wait a minute. 172.5. See here. 172.5 is the sales after increase in the credit policy, because of giving the credit of 60 days, we are having an increased sale by 15% is an expectation. Okay. See here, I will show you one working. Try to understand that. Roughly I will do. Fairly you can see here. 172.5. 172.5. Okay. 172.5 will be divided into two parts. One is profit, another one is cost of sale. Another one is cost of sale. Cost of sale will be divided into two. One is variable cost, another one is a fixed cost. Remaining part will be the profit part. 172.5 into 0.25. If you multiply, you will get 43.125. But real answer is 46.5. Why difference has come? Whenever I say sales increase, along with the sales, fixed cost will not increase. That's why existing situation la total cost will be 75%. At what level of fixed cost? 20%. Even after sale increase, fixed cost will be same. So whenever exam question comes on debtors policy, okay, whenever question comes on debtors policy, whenever fixed cost adjustment is given, First fill the fixed cost. How much? 22.5. Now take calculator. 172.5. Okay, 172.5. In that, how much is the fixed cost? 22.5 is the fixed cost. How much? 22.5 will be the fixed cost part. Next. Moreover, variable cost. Variable cost. How much is the variable cost now? 90 lakhs. Along with the increase in sales, we should also increase variable cost. Variable cost also will increase by 15%. So 115% of 90. 103.5. So 103.5 plus 22.5, 126 is the cost of sales minus 172.5, 46.5 will be the profit part. Okay, I will re-explain one more time. Just to show the numbers, I have shown this. See here. Same answer. See here, this is important adjustment. Whenever sales increase, whenever what increase? Sales increase. Whenever sales increase, along with the sales, fixed cost will not increase. If you directly take 172.5, sorry, 172.5 in that cost of sales, previously 75%, if you take into 75%, you will get a wrong answer because you are directly applying an increasing fixed cost also now. For example, 172.5, yeah. 172.5 into 75%, if you take, you got 129. Means what is increased here? You are increasing fixed cost and variable cost, or you are increasing variable cost and fixed cost simultaneously. But because of having a increased sale or increased sale units, variable cost increases, but fixed cost will not increase here. Therefore, first you fill the fixed cost. Okay, next you increase the variable cost. Okay, then you have to fill the cost of sales, 126.5. Balance will be the profit part. Now tell the contribution. Take calculator. Sales 172.5 minus variable cost 103.5. Contribution will be 69. 69 divided by 172.5. Again we got a profit ratio of 40. Previously, what is the contribution? 60 lakhs. Now what is the contribution? 69 lakhs. What is the increase in contribution made? 9 lakh. This is a benefit number 1. This is a benefit number 1. Therefore, increase in contribution is the benefit 1 in this given question. Always remember this schedule. Cost will increase after 1 or 2 questions. Okay, number of costs will increase, but concept will remain. So benefit is first benefit, contribution benefit. How much contribution benefit? 9 lakh extra contribution we are getting because of increase in the credit period from 30 to 60. Next, second cost, bad debts. What debts? Bad debts. Okay. Existing bad debts, how much? 150, take calculator. 150 into 1%. How much? 1.5 lakh. Now in the proposed situation, 172.5 into 4% will be there, 6.9. So how much cost is there? 6.9 minus 1.5, 5.4 lakh is the cost of increase in the bad debts. Next, interest loss. What is that? Interest loss. This is the most important adjustment in this entire question. Listen, we will do this in 3 ways. For students' understanding sake, I am doing this in 3 ways. What institute is doing, let me first tell you openly. What institute is doing in the study material, what they are doing is, there are 3 kinds of approaches here. In case of calculating the opportunity cost of interest loss, there are 3 methods. Method 1, sales method or sales approach. Like this we will do. Second one is a total cost approach, also called as a cost approach. B, variable cost approach. C, there are 3 types of calculation. Some problems they will do sales, some problems they will do cost approach, some problems they will do the variable cost approach. Which one has to be used in exam is a subject matter of question, because there is no consistency in the study material in what way we have to answer. But after doing proper thorough analysis of entire study material, what I understood, okay, from the study material, what they wanted to convey, what I understood means this is not an assumption for me, it is what happening in the study material. What they have done is, if the question, listen carefully to this, if you don't understand this, repeat again, go back to the video and listen. Okay, listen carefully. if information in the question, if the information in the question clearly mention you about variable cost, okay, clearly mention you about variable cost without mentioning about fixed cost, only variable cost information given in the question without mentioning any fixed cost, you have to use variable cost approach. Variable cost approach. Second type of question, no cost detail was given. They only given that this is the sale, this is how the sale is going to increase because of increase in credit period. Like that they given a question. Follow the sales approach. I repeat it again and again. Listen. Number one, information about variable cost only is given. Sales is given, variable cost is given. Fixed cost and other costs they didn't give. Follow variable cost approach. In the question, they mentioned you about sales only without mentioning about the fixed variable cost. Then follow sales approach. Question la all things given, like in the existing question. Most probably these are the questions coming in exam as well. They will give the sales, they will give the variable cost, they will also give you fixed cost. If that way the question comes in exam, follow the total cost approach. This one. Okay. So what difference will it make? Let me explain. What is this concept? Interest loss. Interest loss. Okay. What is the existing credit policy? Take calculator. What is the existing credit policy? 150 lakhs. I told you 150 lakhs. 150 lakhs is debtors. No, we have a debtors collection period existing 30 days. So tell me, credit sale into debtors collection period divided by 360. Okay, debtors collection period divided by 360. 150 lakhs la 12.5 lakhs only will be blocked. That 12.5 lakhs la 1 year 12.5 lakhs into how much percent interest required return is question la given 12% into 12%. How much? 1.5 lakh. How much? 1.5 lakh. So from this what you have to understand, 1.5 lakhs is the interest loss now. Now you are increasing it to 60 days. So 172.5 into 60 days money will be blocked into 12%, 3.45. There is an increase by 1.95. Increase in interest loss by how much? 1.95. This is which approach? Sales approach. Second, total cost approach. We have to use this in this existing question. Okay. Total cost approach means they say like this. That's an assumption. Don't question that. That's an assumption only. So you should follow these assumptions. What they say is, whenever money is blocked, sir, what do you mean by debtor? What do you mean by debtor? Stock in the godown, we call it stock. Same stock in the hands of debtors, we call it as same stock in the hands of customers, we call it debtor. Repeat one more time. I repeat. What is stock? Stock is the godown finished goods. Finished goods in the godown is called as a stock. Stock will be always valued at profit or cost. Next, second one. Same stock, it is in the hands of customer, we call it debtors. Okay. So when same stock is there in the hands of debtors, why you are adding profit and taking that? Don't add profits into that. Don't add what's that? Profits into that. Take the total cost and do. Take the total cost and do, because profit and all is a something like a fictional amount. Yeah, you are adding that profit. Really, stock don't have profit inside it. Okay. So therefore, what they say is total cost approach. Don't consider profits. Consider only cost of that production or cost of sales and take the answer. So what is our cost of sales? First situation, our cost of sales is 112.5. Take calculator. 112.5 into 30 divided by 360 into 12%. 1.125. 1.125 previously. Next, now increase it to 126 into 60 divided by 360 into 12%. 2.52. 2.52. See here. 1.125 and 2.52. What is the increase in this cost? 1.395. Variable cost approach means variable cost A should be considered. Not even 112.5, 126. 90 lakh, 103.5 you take and calculate 0.9 lakhs and 2.7 increases 1.17 lakhs. Okay. Now the question, which one to use? In this question, fixed cost is given, variable cost is given, and information is also given. So We will use cost approach. We will use cost approach, also called as a total cost approach. Okay. 1.395 is the increase in the interest loss. So that only we should consider. So 1.395 total cost will be 6.7. We are getting a benefit of 9 lakh, incurring a additional cost of 6.79, net benefit of 2,20,500 we are getting. Means at the end we are having a net cost, net benefit, net benefit. Therefore, the final answer will be, since net benefit is positive, it is recommended to give the extra credit. It is recommended to give what, sir? Extra credit. Extra credit period. This may be more clear. Extra credit period. Next. Notes. When problem doesn't give any cost detail, sales approach. When problem give details only of variable cost approach. When problem gives the details of sales variable cost, use total cost approach. The notes. This one question, if you do properly, you will first understand how to approach the questions here. Once that is done, additional 7 problems I will do. Okay, for your mental satisfaction, are problems. Okay, for your satisfaction, I will do another 7-8 problems on this. That takes hardly 1.5 hour time. Okay, that's only working. You can also do along with me and complete the chapter. Chapter wavelength, hopefully, if you understand, every remaining thing will be easy cakewalk. Okay, not at all difficult. This is the end of our first lecture. Second lecture, we will do some more problems in this regard and get mental satisfaction first. We completed. Thank you very much. We'll again meet in the